Hello, everyone. Good morning, good afternoon, good evening to you, depending on whichever part of the world you are tuning in from. Well, I'm very excited to welcome you to yet another promising edition of the Extreme Speed Live. Well, before we kickstart the session, let's confirm that we are all on the same page this morning. So if you can see my screen and you can hear me loud and clear, please let me know in the comment section by typing in hi. So if you type in hi, this confirms that you can hear me loud and clear and you can see my screen without any distortion. So please let me see your comments, please, and let me see your feedbacks so that we can get this session started. So I will be looking into my comment box. Unfortunately, my chats are not loading up right now, so I can't figure out what the responses are at this point in time. So I don't know what to do here. Hold on a second, please, as I saw. So I'm just trying to confirm if we are good to go from the technical team because I can't see my chat right here. I hope this will be sorted out before. So I just hope that we're all on the same page here. Okay, great. I just got a confirmation now. Thank you very much, Carrie. All right, all right. So on this note, I'm going to be kickstarting the session. So I welcome you all once again to yet another promising edition on the Extreme Speed Live. My own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host where we shall be delving into the financial landscape using simple parameters such as trend lines, key levels, and of course, chart patterns to gain valuable insight into the historical price movements of the assets on our watch list for this week. Well, since the beginning of the week, we have been monitoring four major assets, which includes the US All Spot, the US Tech 100, popularly known as the NASDAQ. We also have the GBPUSD, and we also have the XAUUSD, popularly known as the gold spot. And in the last 36 hours, we have noticed that the dollar has been struggling across its major peers since the beginning of this week. And in that regard, we're beginning to see some flow of capital into safe haven amidst the Middle East escalation, Middle East tension going on right now. So we are going to be looking at the implications of how this is going to be affecting our trading decisions today when we take a technical dissection of the chart. For those who are joining us for the first time, you're highly welcome on board. I'm very excited to have you around with us this morning. And what we simply do here is, as technical traders, is to come together as a community in anticipation of the New York session, where we come to review our existing position if we have any, and of course use the information we can gather on the chart to strategically position ourselves ahead of the New York session for trading opportunities. And this happens on a daily basis. 10 a.m. UTC, 11 a.m. West African time. So I do encourage you to stay tuned in and don't miss out on what of the valuable ideas we shall be sharing here today, and of course be part of the subsequent editions. As the more time you spend with us, the better you become in using the strategy, and of course eventually be able to use the information you gather here to make your own independent trading decisions. So on this note, I welcome you all once again. So with that being said, here we will be delving into the economic calendar. This is our usual routine on a daily basis. And for those who don't know, well, the understanding the economic calendar isn't just about fundamental analysis, as it is also a crucial aspect of technical analysis too. Now, looking at the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this event. Now, on the economic calendar, we usually focus on high impact events from economic dockets that affect the assets on our watch list. And for today, we are going to be looking at the United States and the United Kingdom. So what I did today was to include the medium impact event, as we are going to be seeing some economic features that has a tendency of influencing price action. So for today, Wednesday, October 18th, we have a series of events coming in from the United Kingdom, and one of the major ones is the Consumer Price Index. Now, for those who don't know, the Consumer Price Index is released by the National Statistics, and it measures the price movement by the comparison between the retail sale prices of a representative shopping basket of goods and services. The CPI data is considered a key indicator to measure inflation and changes in purchasing trends. And generally speaking, a high reading is considered to be positive for the pound sterling, while a low reading is considered to be negative. Now, if we look at the data we have here, you will see that all of them, both the month on month and in year-on-year data, came in beyond expectations, giving us positive variance at both instances, which is a very positive signal for the United Kingdom's economy. For the pound sterling, because it shows that the inflation is still persistent, and this could likely incite some more rate hikes later next month. And because of this, majority will want to be betting on the pound sterling because of the yield they stand to gain on this asset. Then we also have the PPI core output, which also came in beyond expectations. We also have the producer price index too as well. So all the data from the United Kingdom this morning came in a little bit more positive than expected. So we are going to be monitoring the chart to see how the market has reacted to this event and how we intend to capitalize on the next move. Now, later today, in about 2 hours from now, we are going to be witnessing the publication of the building permits from the United States Economic Docket. So this is released by the U.S. Bureau, and of course shows the number of permits for new construction projects, and it implies the movement of corporate investment, that is U.S. economic development. And of course, a growing number of permits is a positive signal for the US dollar. Now, if we look at the previous data here, it came in at 1.543 million, and we have economists projecting 1.45 million, showing that there is the expectation of a contraction in that sector. Then the housing stats data will also be coming in simultaneously, and this is an indicator that tracks how many new single family homes or buildings were constructed, and the figure includes all private and publicly owned units, and it indicates movement of the US housing market. Now, in this one too, a general generally a high reading will be considered as positive for the US dollar. Now, the previous data for the housing start came in at 1.283 million for the month of August, and we have a consensus projecting 1.38 million, which is a little bit on the high side. So we have a mixed expectation from the housing sector today. So we are going to be looking forward to what the actual data is going to be like. Now, besides these ones, we have a series of speeches coming in from the Fed's officials today. We have Wallace, we have Williams, Bauman, and Page and Cook all having speeches today, which of course will be having an influence on price action for today. And of course, one important thing about these speeches is that they will be giving us an insight into the central bank's outlook on the economy, potential policy shifts, and of course interest rate changes, which in the long run will be impacting our trading decisions and market sentiment. So with all the information we have gathered here on the economic calendar, as technical traders, we will be going deep into the charts to see how the market will be anticipating the upcoming event and how they have reacted to the previous event to see how to position ourselves for the next move. So the first asset we are going to be looking at today, as usual, is going to be the US oil spot, which is loading up right now. I don't know why my chart keep delaying at the first instance of opening up. All right, so here we go, the US oil spot, and in fact in the last 24 hours we begin to see some shifting momentum as buyers are beginning to gain some traction in this particular market. Well, the recent spike in oil prices can be attributed to the escalating tension in the Middle East, and particularly after this tragic incident at Gaza hospital yesterday, which claimed over hundreds of lives, sparking fears of potential oil supply disruption. And additionally, the diminishing open interest in the market has played a significant role too as well. Now, let's look at things from a technical standpoint, what led to the decisions we made so far this week, and in fact, how did the week started for us here in this community. So at the beginning of the week, it was more of a consolidation phase, remember, as we saw price confined within the $86.60 level and the $85.90 area, where we noticed which emphasized the level of indecision at that point. And of course, you know how we do it in this community. Whenever price action falls into this kind of range, we do want to exercise patience and wait for a signal in the form of either a breakout of the resistance line of that range for buying opportunity, or the breakdown of the support line here for selling opportunities. And remember, we did had a buy position triggered at the beginning of the week where price moved about 45 pips in our direction, but unfortunately we were taken out of that position in a loss as we saw price drop back down, breaking down the support line, retesting it to confirm a sell position here. And I remember yesterday talking about us moving our stop losses on all sell positions to break even because of the nature of price action around that $85 area. And if you remember vividly, this $85 area was serving as the neckline of that double bottom structure we identified on the higher time frame. We are going to be talking about that in a moment for those who are not part of our live session yesterday. So I talked about the potentials that buyers could come in here, that if price continues to find buy pressure, then we want to be positioning ourselves above the $85.90 level to capitalize on that move, then add more position at the breakout of the $86.60 level. And for those who took advantage of this opportunity, well done, and kudos to you for being on standby to capitalize on that move. And if you still have your buy position running right now, the first position should currently be running with over 200 pips in profit, while the second position will currently be running with 130 pips in profit. So as at this point, you should be having a minimum of 300 pips running in profit right now. And once again, well done to you for being on standby to capitalize on that move. Now, the next thing we want to be doing right now is to secure these current buy positions and move our stop losses accordingly. Now, with the way things are going right now, I will be suggesting that anywhere below the $87.40 area and the $86.80 level seems most appropriate to move all stop losses to at this point in time as we continue to monitor price action. And please remember that we do want to be giving enough room for price action to breathe. Now, with a well secured position at this point, what is going to be our next line of action for today? Personally, I already had another buy position triggered at the breakout of the $87.50 area. And before we go into the details on why I took that move, let's run through the higher time frame so that we can all be on the same page here and of course have an holistic perspective into what is going on in this market. So at the beginning of the week, our center of focus was on the 4 hours time frame, where we were able to identify very interesting and simple setup that we intend to use to guide our trading decision for this week. And one of the things we noticed here is, one, since the beginning of this month, we noticed that price had consistently found lower highs, as you will see here, having a beautiful descending trend line after connecting the series of lower highs. And besides that, we also noticed the gradual transition of price action into a robust reversal pattern in the form of a double bottom structure. Now let's take a quick visual representation of what I'm talking about here. Now we saw how price dropped since the beginning of the week into the $81 area, and as soon as price got into that structure, that zone, we saw how it became difficult for sellers to break through that area, and this led into price moving back into the $85 area, and the second attempt by the sellers to break down the previous low failed outrightly, giving us a higher low. As you will see, price was unable to break down the previous low, then transition into a very beautiful reversal pattern in the form of a double bottom structure. And of course, you know how we do it in this community. Whenever we identify these reversal setups like this, the next thing we want to be doing is to mark out the neckline, which interestingly lines up with that $85 area, which is serving as our key level for this week. And of course, you know what we expect: a breakout of that structure will validate that reversal pattern, and we saw what happened here on Friday. Price did break out the structure and interestingly came back to retest the neckline, which lines exactly with the expectations of an uptrend move. And as you will see here, we have been part of this bullish momentum since the beginning of this week, and kudos to everyone who has been part of this trade. So this is what I really wanted us to see on the higher time frame, so that we can have an idea into what led into the bullish expectations we are currently in right now. And as the way things are going right now, price is gradually approaching a very important level at the $89, let me call it $89.30 zone. This area here, let me mark it out here, as we will be needing it as to guide further buying opportunities if price continues to find higher highs and higher lows in this market. So you do want to be marking out the $89.30 level. Now look at what has been going on here in the past. We saw what happened last day of the month of September. We saw buying niche here before this level was broken to the downside retested at the beginning of this month, and since then price have been trading below that area. Now the way things are going right now, price action is gradually approaching that structure. Hence, we want to see how market participants will be reacting to this level today to decide what our next line of action will be. Are we going to be seeing a breakout of the structure where this level here could become a platform for more buying opportunities, or are we going to continue to see selling pressure below that structure to incite a downtrend move? Now, to guide our trading decisions for today, we shall be scaling down back into our lower time frame, where we want to see how the market participants has been reacting to this important $87.50 level. Now, scaling down into the 1 hour time frame, you will see this was what I saw this morning, which made me to trigger the third position here. Now, as at this morning, I saw how the $87.50 area was serving as a selling niche, as we saw that since price got into the structure, we begin to see some selling pressure resume during the early hours of today. And of course, considering the strong bullish momentum here, I placed a buy stop order above the $87.50 area to capitalize on that uptrend continuation. And as you will see, since the breakout of that level happened, price action had moved about how many pips now? About 40 pips in our favor. And if you took advantage of that move, it's okay, well done to you. But if you're not, well, let's see if the market will come back to retest that structure to give us more opportunity to join the uptrend scenario. So one of the things that we are going to be looking out for today is a potential retracement back into structure, where the appearance of buy pressure here will welcome more buying opportunities. And if price does the opposite in this case scenario and continues to climb up, then we should be looking at another level. This is the highest point price action has been for this week, and that is the $88.50 level. So we should want to be marking that level out on our chart. So if price action goes on to break out, retest the $88.50 level, will welcome more buy position. Now, this is the $89.30 area, which we marked out on the higher time frame. So we want to be seeing how the market will be reacting to that area. Remember, I told you how this level have played a major role from the last trading day of last month into the first week of this month. We saw the breakdown retest at on the 4 hours time frame. So we want to see how the market will react to that area. And if we have a breakout, then this will confirm more buying opportunities. But if price will if buyers find it difficult to break out and we begin to see some reversal patterns like a double bottom, double top structure, then the breakdown of the neckline will be welcoming a potential crash. So let's see how the market will play out here. I still hold on to a bullish bias on the US All Spot for today's trading session. So let's see how the market will play out. We shall be back again tomorrow to project to see how well these assets have been doing. Then there's one more thing I would like to project on this chart, and which is an ascending trend line that we will need to guide our trading decisions for today. So let's mark these levels, the higher lows here, and let's have a descending trend line to work with. Sorry, an ascending trend line to work with. All right, hold on a second. I'm going to be bringing out my candle chart right now so that, okay. So we have a couple of ascending trend line here. So as long as price remains above that ascending trend line, we shall feel comfortable in the buy position here. So we have this low here. We had this here higher low, though we had a breakdown of structure, but price climbed back above that level. And since then, it has remained above that ascending trend line. So as long as price remains above this ascending trend line, we shall feel comfortable in our buy position. So we might likely see some retracement into structure to inside the uptrend scenario. Please take note of this. So The other thing that we will also be looking at is the potential selling potential in this market, and if price will breach that ascending trend line, then we can start considering selling. But I doubt if that will happen today. But if it does happen, let's be on standby to capitalize on selling opportunities only if the ascending trend line is broken to the downside. So these are my views on the US All Spot for today. So you do want to be marking out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions. So if you have any questions, let me know in the comment section. I will be taking the next 10 to 15 seconds off for your questions. All right. So, in the absence of no questions, I want to assume that we are all on the same page. And it's on this note we shall be moving on to the next asset on our watch list. So the next asset on our watch list for today is the USTech 100, which is popularly known as the Nasdaq. And in fact, we had a shakeout in this market yesterday as our buy position was taken out with a moderate size of profit, or at a worst case scenario of break even, depending on where you placed your stop loss on that buy position here. Now let's run through how the week started for us in this community on the USTech 100 and what led to the decisions we made. Now we saw what happened here at the beginning of the week, as it was more of an indecisive phase, as price action was confined within the 15,065 level and the 14,980. And with this situation, it was clear that there was a level of uncertainty going on in the market. And whenever we identify this kind of uncertainty, this kind of flat range, we usually exercise patience, waiting for either the breakout or breakdown of that range to give us an opportunity to trade. And one of the things I mentioned on Monday is the fact that as the 14,980 and 15,000 zone had been characterized with a lot of buy pressure, that we might likely be seeing an uptrend situation happen this week. Then we saw buy pressure happen here, so we positioned ourselves above the 15,065 level to capitalize on that bullish momentum. And in fact, we saw price moved about 130 pips. We moved our stop losses accordingly, locked in some positions, and of course we saw what happened yesterday as price took us out of that position. Then we saw some volatility happen around this area. Well, at this point, I was shaking out from a sell position, which was topped out at a loss at that point. And if you remember what I said here yesterday, that if we have an ascending trend line, which we acknowledged at the beginning of the week, and that as long as price remains be above the trend line, we feel comfortable buying. But if we have a breakdown retest of that trend line, we do want to be getting ready to sell, right? Now, if you look at the structure yesterday, about an hour into the New York session, we saw our price took us out of our buy position, breaking down that ascending trend line for the first time in the last couple of weeks, and price came back to retest the structure, and since then we have noticed lower lows and lower highs in that regard. And for the fact that price is currently trading below that ascending trend line, it makes quite a lot of sense to look out for selling opportunities here. Now, with what has been going on here since the beginning of this week, actually, you will see that we have lower highs in this market, and as a result of that, we do want to be connecting them to give us a trend line to work with for today's trading session. So if we connect it appropriately, I would like to thicken this a little bit and give it a red color to emphasize the bearish expectations here. So bring out the candle chart and let's do some adjustments so it can fit majority of the pivot highs. Now look at what we have here. We have a descending trend line to guide our trading decision for this week. And for those who are taking advantage of the breakdown of the 15,065 level, well done to you for being on standby to taking advantage of this move, as you will currently be running with about 35 pips in profit. Now going into the New York session today, this descending trend line we have on this chart right now is going to be playing a major role in guiding our trading decision for this week. And as long as price remains below the descending trend line, we shall feel comfortable in a sell position. Now, with the way things are going right now, if you had missed out on the sell position at the breakdown of the 15,065, then I will be advising you to exercise patience for new trading setup. And from a technical standpoint, we know that when price breaks down of a structure such as the 15,065 level that we have here, we expect price to come back at some point to retest the structure in anticipation of a downtrend scenario. So it could retest either the 15,065. In fact, it shares a beautiful confluence with that descending trend line. So let's see if the market will give us that opportunity to join the bearish momentum at the retest of that structure. And if price continues to drop to the downside, I want to be looking at the breakdown of the zone between the $15,000 level and the 14,980 to incite more selling opportunities at this point. So everything is looking bearish at this point, and please remember to alight this descending trend line here, as it's going to be playing a major role in determining the direction of price action today. Now, in as much as we're looking out for selling opportunities at this juncture, what is it that will make us change our bias to bullish? Well, the only condition that will make us consider buying at this point in time is only if price will break out of that descending trend line. So if we see price break out of this descending trend line, this will be the first time price will be breaking out of the structure in the last 60 hours, and it will be a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt. And in that case scenario, we want to be waiting for confirmation on our lower time frame, like a retest of the structure to incite an uptrend move. And if price continues in such a way that it breaks out of the 15,200, we will be welcoming more selling opportunity there. But at this point, I doubt if that will happen, as things are looking bearish at this point in time, since price still remains below that descending trend line. So we hold on to a bearish bias unless the price breaks out of that descending trend line. So you do want to be marking out these levels on your chart, as we will be needing them as a reference point to guide our independent trading decision. So let's see how the market will play out going forward. So we remain bearish here, and let's see if how far this is going to go. If you have any questions, feel free to let me know in the comment section. I will be taking the next 10 to 15 seconds off waiting for your questions, while you can also use that time to mark out these levels on your charts. All right. So in the absence of no questions, I want to assume we are all on the same page, and I see your comment, Yuo. Good morning to you, Yuo. This is my first time seeing a comment from you. I'm very sure you are new with us. And let me know in the comment section if you are truly new with us. And thank you for being around with us this morning. All right, with that being said here, let's move on to the next asset on our watch list for today. So the next asset on our watch list for today is the GBPUSD, that is the cable market. And the market has remained range bound since last week's trading session. As you will see, price had been confined within the 1.22200 level, and our key level for this week situated at the 1.21250 area, which emphasize the level of indecision in this market. However, if you look at the structure, especially within that range, since the beginning of this week, you will see that there is a bullish sentiment within this range, and particularly following the release of the data from the United Kingdom this morning, where the annual consumer price index inflation for September remains stable at 6.7%, though it exceeded the market's expectations of 6.5%. Now, given this positive development, it is advisable to secure all buy positions while we remain vigilant for potential trading opportunities at this juncture. As the market is still remains very indecisive here, and you know how we do it whenever price falls within this kind of range, we do want to be exercising patience. However, the reason why we sold at the beginning, remember we have been selling the GBPUSD since the beginning of the week. We initially had this range identified that was between the 1.21625 and the 1.21375, as you will see here, and we anticipated the breakout retest of that resistant line to give us an opportunity to buy, where we had our first buy position triggered at the breakout of the 1.21625. We added more positions at the breakout of the 1.21750, and of course we had about 100 pips total on those two buy positions before that bearish momentum came in to take us out of that position. And of course, if you had moved your stop losses accordingly, you must have been taken out with a considerable size of profit at that point. Then since that day, we have been noticing the emergence of buy pressure around that 1.21625 area to further emphasize the strength of the buyers within this range. And to further buttress this buying strength, we have a couple of ascending trend line after connecting the series of higher lows. As you will see here, we have one right here, and we have the major one at this point. And of course, you know how we do it in this community. As long as price remains above that ascending trend line, we want to feel comfortable buying that asset and looking out for more opportunities to buy. But with the way things are going right now, following this buy position that happened here during the early hours of today, which moved about 50 pips from the first position, and the second position moved about 30 pips, a total of 80 pips. At this point, I have been taken out of all the buy positions right now, as I moved my stop loss to that area around the 1.21750, and I'm advising you to do so if you still have a buy position running at this point in time. Now, the reason why I have asked us to move our stop losses to secure this buy position is simply because of the inability of buyers to break out of this 1.22200 level. Remember, this area here had been a strong selling niche in this market since last week's trading session. Look at what happened here last week Thursday. last week. Friday, we saw selling pressure here. And at the beginning of this week, despite the strong bullish momentum, we saw how that area became a barrier, negating all attempt by the buyers to break out of that structure. The same thing also happened during the New York session yesterday, as we saw selling pressure resume here. And a couple of hours ago, we also saw selling pressure around this area. Now, there's one significant thing that is going on despite this barrier here is the fact that price had begun to find lower highs here, and if we connect the series of lower highs, we have this descending trend line to work with for today. And with the way things are going right now, it appears that buyers are gradually losing that momentum at this juncture as price continues to find lower highs here. And in that regard, we might be getting ready for a huge sell-off here. So how do we want to be capitalizing on that one? Well, since we have an ascending trend line on our chart already and price still remains above that trend line, let's exercise patience and wait to see how the market is going to be reacting to that trend line. So if at any point in time today we notice or we witness a breakdown of that ascending trend line, that is, we have a breach, and this will be the first time this will be happening this week, then at this point we would like to start considering selling this asset. Now, for me personally, I will be advising that we wait for some confirmations to give us a little bit of more confidence to be part of the bearish move. And what I want to see is a sign that buyers are finding it difficult to climb back above that ascending trend line, which will reflect on the chart as a retest of either the 1.2625 or the 1.21750, which interestingly shares a confluence with that ascending trend line to incite a sell-off to the downside. And if price action continues to drop, we have multiple levels here that we will be using to maximize the potential of this bearish move. So price dropping below that ascending trend line will be all we need here to be part of a downtrend continuation. So let's mark out that trend line here and see how the market will play out from that area. Now, another thing I would like to call our attention to here is the nature of this downtrend continuation pattern, which is gradually unfolding on the chart. Now, if we look at this impulsive move that started last week, Wednesday and Thursday, we saw our price transitioned into this triangular pattern, which is more of a this looks more like a pennant sort of a thing. And whenever we have this structure, we expect that price will break down to incite a downtrend continuation. So you can see how this ascending trend line is going to be playing a major role in determining if we are going to be selling this asset today. So mark it out on your chart. A breakdown retest will be welcoming selling opportunities. Now, with this being said here, let's look at the potentials the buyers also have. And considering the oscillation of price action within this range since last week Friday, I'm of the opinion that I would rather want to wait for the breakout of that resistant line at the 1.22200 level to capitalize on a bullish move, as a breakout of this resistant level would have taken out all the sell positions within the zone. And then if we can see some retracement into structure, which would reveal the resumption of volatility in favor of the buyers, then liquidity in favor of the buyers, then we can be looking out for more opportunities to buy from this area. So this is what I'm going to be looking at for the GBPUSD today. So I do hope that you mark out this level. I'm going to be looking forward to the breakout of the 1.22200 level before I want to be jumping into any positions, any buy position here, and a breakdown of the ascending trend line for selling opportunities. So mark these levels out and let's see how the market will play out from this current structure. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions, while you also use that time to mark out these levels on your chart. All right, everyone. In the absence of no questions, so I noticed some spam messages in the comment section that might catch your attention. Please, I want to assure you that these messages are not from Xtrend Speed at all, and Xtrend is not liable for any of this spam content. Your online safety and trading experience are of topmost priority. Please, I encourage you to be very cautious and not to trust this spam contents. If you have any concerns or questions, feel free to reach out to the customer support channels. Look at the home page, you will see this logo of a headset. Click on that and you will be directed to a prompt customer service that will attend to you. So if you have any questions or assistance, or you want any provide reliable, accurate, and trustworthy information, please go to the contact center for updates. So I'm not trusting these people, and Xtrend is not liable for any of this spam that you're seeing in the comment section. So please be very, very careful. So in the absence of no questions, I want to assume that we are all on the same page. And on that note, we shall be moving right into the next asset on our watch list. So the next asset on our watch list for today is my favorite, and that is the XAUUSD, which is popularly known as the gold spot. And in fact, in the last 24 hours, we have been buying this asset. Well, after we noticed selling expectations at the beginning of the week, remember we were selling the XAUUSD before we saw this bullish expectation on this chart at the beginning of yesterday's live session? Well, the price of gold has been steadily increasing, and in fact, this upward trend can be attributed to the escalating geopolitical tensions between Israel and Hamas as investors seek the safety of gold, which is popularly known as a traditional safe haven asset. Now, with the current positions we have right now, we are about over 700 pips in profit at this point in time. But before we go into the details on that one, I would love us to run through how the week started for us in this community and what led to the decisions that made us to buy these assets this week. Now, at the beginning of the week, it was more of a bearish momentum. Remember, we saw the week started on a bearish note as price action broke down the support line of that range at the 1918 level. And because of the breakdown of the structure, we agreed that we will be looking out for some retracement into structure where the breakdown again will welcome selling opportunities. And of course, during our live session yesterday, I told us all to get out of that sell position, basically because of the observation of the inability of sellers to take price further down below this 1915 zone, and the appearance of buy pressure around this area was a red flag for us that price may likely be going to the upside. And as a result of this, we said we shall be positioning ourselves above the $1,918 level to capitalize on that bullish momentum. Now, in addition to the observation of this demand zone here at the 1915, we also confirm the emergence of an uptrend continuation pattern, which came in the form of a pennant, or we could call it a triangular pattern. So we saw this impulsive move into the structure, price transitioned into something like this, and of course when we notice this uptrend continuation pattern, we want to be waiting for the breakout of that resistant line, that is that descending trend line, to incite that uptrend move. So it was very interesting setup for us yesterday, and remember we also had this ascending trend line to guide our trading decisions. And what we said here yesterday is that as long as price remains above that ascending trend line, we shall feel comfortable in our buy position. Now, since yesterday we have been buying, and remember we had multiple levels that we said we will be using to maximize the potential of this bullish move. So we have levels at the 1923, levels at the $1,928.50 area. We also had the 1930, and this morning I added another one at the 1940. So currently we have over 600 pips in profit right now, and well done to everyone who had been part of this profitable journey. Now, if you still have a buy position running right now, then it is high time you moved your stop losses to secure this current buy position. And from the look of the current market structure, I will be suggesting that anywhere between the 1940 and the 1936 remains an area you want to place your stop loss, as you do want to be given enough room for price action to breathe. So with a well secured position at this juncture, what is going to be our next line of action for today's trading session? Well, this morning while I was trying to dissect the current market structure, I was able to identify a simple setup here where price was initially confined within the 1940 and the 1936 since the early hours of today's trading session, giving us a beautiful flat channel to work with. And of course, you know how we do it. Whenever we have this kind of range, we do want to exercise patience, waiting for either the breakdown or the breakout of that range to give us a signal of where price is likely going. And Considering the fact that we had an impulsive move before price action transitioned into this range, it's more of a uptrend continuation pattern in the form of a bullish rectangle. So what I did here was to have my buy stop order sitting above the 1940 to capitalize on that uptrend move. And for those who took advantage of this opportunity right there, well done to you for being on standby to capitalize on that move. However, if you had missed out on this opportunity, well, I will be advising you to exercise patience at this juncture, and let's wait for new structures to mature before we jump into any positions here. Now, what are the things we want to look out for here? Now, let's consider the first situation as we have the breakout of the 1940, and from a technical standpoint, there are still chances that price could come back to retest the structure in anticipation of an uptrend continuation. So if price comes back to retest the 1940, then we do want to be getting ready to buy at the retest of structure. However, if price continues to find higher highs instead, then we have another level at the $1,946 area, which you do want to be marking on your chart right now, has a breakout retest of the structure will be welcoming more buying opportunities. Now, there are two ways to which we can capitalize on this move. Now, the first one is for those of us who have been part of this profitable journey. That is, you are profitable at this point, hence you can afford to leverage on some of the profits you made so far this week to test waters above the 1946 and see if it's going to work. And if it doesn't work, we know that we are only risking some of the profit we had made this week. However, if you are new with us and this is your first time taking a position, then I will be suggesting that you hold on for confirmations to happen. So when the breakout happens, you scale down to your lower time frame to look out for retest of structure before joining that uptrend move. And the reason why that is simply because we do want to feel comfortable in the buy positions. As a confirmation, retest of structure will be a good signal that buyers may likely continue to the upside. And of course, you do not have any profit indicated to leverage on at that point. So it makes a lot of sense for those who are joining us for the first time to wait for a retest of structure before joining. But if you have been part of this trading journey so far this week, just place your buy stop order anywhere above the 1946 and let's ride this momentum all the way to the upside. So this is my view here. I still maintain a bullish bias on the XAUUSD, and I'm yet to see any situation here that will make me want to consider selling. However, considering the ascending trend line we spotted here at the beginning of the week, which has been supporting this momentum so far this week, we might at some point in time see price retrace back into that structure. Well, if we are going to be taking advantage of that potential counter trend opportunity, I would rather want to be seeing some lower lows and lower highs, after which I would like to join, then wait to see how the market will be reacting to this ascending trend line, where depending on how price reacts to that trend line will determine if we are going to be adding more sell position or getting ready for another wave of bullish momentum. So breakdown retest will welcome more selling opportunities, while the appearance of buy pressure or the transition to a reversal pattern will be welcoming an uptrend continuation. So let's see how the market will play out here. Mark out this major ascending trend line, as it could serve as a pivotal juncture to guide an uptrend continuation here. So this is my view here on the XAUUSD for today. I maintain a bullish bias in this market, and let's see how the market will play on going from here. If you have any questions, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds off to see if there are any questions before we do a roundoff of today's trading session. Hello, Murphy J. Good morning to you. Glad to have you around. Hello, Marketer. Good morning to you. Glad to have you around with us this morning. So, in the absence of no questions, I want to take this as a confirmation that we are all good to go this morning. And it's on this note I want to be rounding off. So, today we were able to attend to four major assets, which includes the US All Spot, the USTech 100, popularly known as the Nasdaq. We also have the GBPUSD and, of course, the XAUUSD, all of which we were able to identify simple trading setup using fundamental tools such as trend lines, key levels, and chart patterns to gain valuable insight into the market and of course use that information to strategically position ourselves ahead of the New York session today. So I'm very confident that with the simulations we have, if we remain patient and allow our structures to mature, we're going to be coming here tomorrow on another positive note. For those who joined us for the first time today, I do hope you are able to gain one or two things from what we discussed here today. And if you do, I look forward to seeing more of you tomorrow. And I encourage you to be part of the subsequent editions, as the more time you spend with us, the better you get to understand how the strategy works here and eventually be able to use the information you gather in this community to make your own independent trading decisions. So once again, you are welcome on board, and I look forward to seeing you guys same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well these assets have been doing and at the same time get ready for tomorrow's New York session. So it's on this note I wish us all the best of luck today and do have a wonderful evening out there. Bye bye.